Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Drew Meredith, how you doing?
Happy to be here, banging the table for the end of our competition.
What? Yeah, actually, I'm glad you brought that in because I was just going to refer to it, but I didn't want to shame too much.
Yeah, thanks. What do I owe you for this one? I have to buy you 10 shares.
We are recording this on the 12th of December, and as everyone remembers, just like that, this is exactly 12 months on from when Drew picked Platinum and I picked Magellan.
This is when I hate Google.
Google overlords tell
Google
us.
set the reminder. Did you see what Platinum did today?
Oh,
it's like
Platinum.
It's like Platinum
my
knew
God,
that this bet was coming up.
This is Thursday, the 12th of December. Chuck it into Google or I'll do it for you. How much is it down today?
Let's be clear that I haven't, nor have my clients invested in Platinum shares, BTM shares. Thankfully.
He was about to say thank the franking credits.
It's a PG podcast. So it's been a tough week for Platinum. Share price has fallen. Oh, wait. Oh, no. That's ex-dividend was on the 9th. I was trying to claim some help here.
So don't even worry about the week, Drew.
At 21.2% as we speak today. Guess what share price it's trading at?
I could say it's 67 cents.
67 cents. I remember, I'm not sure if you remember this, my business partner, Jamie, when we joined that business a long time ago, this was in, pre-GFC, wanted to give bonuses and we involved the company in a few floats of companies that, and if there was any profit, obviously pay tax, all that sort of stuff. We got a bonus from the float. Platinum was one of them. I think that's the only money I've ever made out of Platinum.
Oh, wow. Yeah. It IPO'd at $8 and it's currently 67 cents, down 21% today. So that would then, year over year, take it off a cliff.
That's 90%. 97%.
It's down 48% in exactly one year. That's what I got in my numbers.
Yeah.
Is that what you're looking at?
I just look at good old Google Finance.
Yeah. This one right here?
Year to date, down 51%. 1 year, 49%.
That one.
Yeah, same one.
Wow.
Oh, wait, it's up 1 cent. There you go. Watching closely. I mean, there are some kind of unexpected drivers that came in to drive it this week, but one not so unexpected.
You didn't foresee that 12 months ago?
No, I mean, Regal pulled their bid for Platinum on, the unsolicited takeover bid that was in place for Platinum. That was pulled on the 9th. And then the company announced another 10% of their assets under management were withdrawn in the previous month, I believe, in November. So it's just been, it could have waited. Investors could have waited another 3 weeks or something. And I don't think it would have saved me, though. Magellan, on the other hand, is like completely opposite story.
I thought I was...
So they own Guzzi and Gomez too?
Yeah, they own a chunk of that. Or did they... No, did they divest it? I'm trying to think off the top of my head. Did they divest that? They've still got Barrenjoey.
Still got Barrenjoey, which is starting to make money and look pretty attractive.
Oh, yeah.
I think they got rid of GYG into a private equity fund.
I think
maybe
they
still had a stake in that fund.
Yep. I'm pretty sure they did.
Wouldn't surprise me. I mean, you can't roll GYG all the way and then not hold it into IPO.
Is that a burrito joke? You can't roll GYG.
Can't roll it.
Well, I said GYG was
so the difference is only
42%.
A 68% difference, but we'll take the 78%.
So that means based on the power that B Series.
Do I have to buy you shares?
Yeah, wait, how much do you...
Does that attract fringe benefits tax?
No. What's that? If the bet was if Owen picked MFG, if he wins, he gets 1 Magellan share. Oh, this was to adjust to the fact that Platinum was worth a lot less. Platinum, if you got it right, which sadly, regrettably, you did not, I would have given you 6 Platinum shares. I could still give you 6 Platinum shares. I probably wouldn't notice too much.
$3.60 it's a rounding error for you. I basically paid for your Magellan share anyway. I got your banh mi for lunch. That you
did, yeah.
That you didn't eat. It's just left on the desk. So
as 2024 rolls to a close, we can safely say that
funds management is hard.
Yes.
Active funds management is hard.
Yes, it is. What's GQG? There's a lot of...
What better time for us to put together our own portfolio, as we will in a few weeks' time?
Yes, if you're listening, get your stock picks in. We've got a few called in the big guns. Remember, on the 1st of January, the $10,000 portfolios go live. Drew Sun's portfolio, the Alpha Beta Gamma portfolio. I don't know what I'm calling it.
Alpha Beta Gamma.
Sounds like a fraternity. Probably is.
Get some.
Get some. We're thinking of names for the portfolios. Obviously, it's been a creative afternoon. But there's also a community portfolio, like listener portfolio. We need to get that going. Everyone that's listening to this, you can contribute. We've had a few picks already. A couple of absolute shonkers, which I would say I'm happy to include in your portfolio. Like
not mine.
Fast Brick Robotics. Sheesh. Echo IQ. I mean, YOLO Folio wrote in and said, I mean, it's commercializing their AI tool in the USA. You can borrow some of my conviction. Another person says, it's got 40% of my money in Solpats. Why don't we pick that? Interesting.
Diversification. Yep. I mean, this is a very different objective here. So if we were investing for retirement, investing for 30 years, we'd have a very different approach to investing for a 12-month period. And this is a calendar year. So we're going to be sitting here this time next year. One thing financial, you're not going to get halfway through and then do one of these bets and then say it was for 12 months.
We're going to do Siri and it's going to record it from the 1st to the 31st.
Okay.
Ultra long term is 1 year in the active funds management community. No kidding. Or not. So it's just 12 months, not indicative of any investment skill whatsoever is what every single study would tell us. So 12 months.
Which means conviction is key.
Which means you come out swinging.
Yeah.
Yeah. And it's basically a cowboy's portfolio or a cowgirl's portfolio.
Yeah.
So.
Cow person.
It's
topical because we're watching Yellowstone at the moment.
Oh, really?
Incredible show.
Oh, very good. Imagine owning that amount of land.
Yeah.
Anyway, if you haven't seen it, good rec. You know what else is a good rec? Ted Lasso.
Yeah, I've watched it twice in full now.
Oh,
yeah.
It is just leaves you feeling better.
Season 2.
Good vibes over Christmas too. Rates on hold again, but RBA kills hiking prospect. Oh, RBA.
I know, it's good news. I was nearly insolvent.
Yeah, bloody oath.
What do we say, rate hike before Easter?
You said rate cut before March 31st.
So it's Easter? Close to Easter.
Not quite. 31st, yeah.
So good news, and it's still weird that the RBA is, as someone quoted, at the starting blocks of the rate cutting cycle, but they did come out this week. Yes, and we're very specific in removing and this is one of the weird things about finance, is where the RBA will issue a press release and everyone will highlight sections and see the tone of language change to determine what the next move in interest rate is going to be.
Classic.
But basically the prospect of increasing rates has been dead in the water based on the latest press release. And the RBA was essentially talking about the fact that they're getting confidence that inflationary pressures are declining in line with their forecasts. So there's every chance of a rate cut before March next year. Some are suggesting in February.
Well, according to the...
I've only got 2 meetings.
ASX 30-day intrabank cash rate futures implied yield curve. Bring that up. It's going to come down to the wire.
It is.
So what did I just say? I just meant this is like a chart that plots like what the market is thinking based on bond yields. It looks like, according to the market, the first rate cut is March 2025, which
would be the first week of March.
Would make you an oracle.
An oracle again. I'm slowly redeeming. Deremith is redeeming.
Deremith's
himself.
coming to Bloomberg.
Yep.
God, they would be crazy not to give you a job. So 4.155% is the implied yield curve at March 2025, implying one rate cut.
Yeah. It's clear there's pressure. You talk to anyone with a mortgage. You look at spending, and a lot of it's brought forward. Yes, we all went a bit crazy on Black Friday and Cyber Monday and what seemed like a month of sales that was supposed to be one day. But it's clear spending, and a lot of areas of spending are struggling.
Did you buy anything on Black Monday, whatever?
No, it all started. I was ahead of this big kind of all ready to go, and then all the sales come out before. So, but I basically bought all their Christmas presents, all their presents from Santa, well ahead of Christmas.
Santa.
getting rid of that crazy period that's about to come.
Yeah. Interesting. I accidentally bought 4 copies of Joe Aston's The Chairman's Lounge book. I don't actually know how it happened. I just had, on 4 different days, 4 different books rock up, all from Amazon. I think there's some sort of like typographical error in there. I don't actually know what happened.
Cookies in there?
Yeah, I gave one to Mitch. Happy Merry Christmas, Mitch. Yeah, so...
You had to buy his, but I thought he would have given you some free books.
What else? No, I don't think I bought
I'm giving away free books. Surely Joe Aston can give away free books.
Oh, hardcover, mate. Yeah. We've got some... actually, is there any...
Talking of books, I've heard talk about you thinking about a book also.
Starting a rumor on the show. Yeah. It's Paul Owen's Almanac. Just me.
What I haven't learned from investing.
Yes. Just waving my fist at the clouds. No, I don't know, Drew.
Man yells at cloud.
I don't know what I would write about.
You talk.
Yeah.
All week. You talk for a living. I'm sure you can convert that into Word. You can just use Siri or ChatGPT to talk into and generate that book.
No, if I do book, I really want to make it meaningful. I want to make it really meaningful to people. But I just wonder, like, there's so many good books out there. There's more shit ones, to be fair. But there are some good ones.
Where does the golden years? That's How to Eat Well in Retirement sit within there.
Maybe I could do the sequel.
We're actually talking about a new book too.
Oh, really?
Yeah.
What's it going to be on?
I had a few different ideas, and the kind of one that seems to be coming to fruition is, or that kind of makes the most sense, is probably similar to John Addis's book, but it's what we've learnt from advising what is now close to 1,000 families over 20 years.
Yeah.
So kind of this walkthrough case study, case by case, what are the experience, what have people got right, what have people got wrong, and just combining all that into some easy to digest stories.
That's great.
That's where we're sitting at the moment, but we'll see.
I like those books I like those anythings where there's like a kind of through time look at what are the really wealthy families doing, what are the people who want to be really wealthy, what do they do?
What if you started late? What if you started early?
Yeah, that'd be good. I'll get around that. Any other economic news? I did see this on Bloomberg yesterday. I don't have a Bloomberg terminal, FYI. I just watch it. We got it on the TV in the office. China to increase stimulus. It's been a pretty tough year for anything China related.
But parts of the market have done exceptionally well. I think there was one month where the Chinese market was up something like 20-25% in a month.
Yeah, I remember reporting on that. I was like, oh, jeez.
I think, and this remains a story of like that active versus passive management. So you could buy a passive exposure to China, but you're going to get the biggest tech companies and not necessarily what you want. Whereas the Chinese economy outside of property is doing reasonably well. It's still growing at 4.5%. But it's been all about this. They've essentially been allowing the property or slowly allowing the property sector to adjust rather than forcing a collapse like what happened in Japan or the US 30, 40 years ago at different points. And having given it a break, they're now starting, they've increased stimulus about a month or so ago, and now they're talking about significantly increasing that again. It's been underwhelming in the context of the rest of the world. But I think it comes down to China always having this 10 to 20 year view rather than what's best, what's going to generate votes in the next 6 to 12 months. It's more about how do you set the economy up for the next leg of growth. So, and that would be a massive positive for Australian, probably the mining sector. We know that a lot of challenges in lithium, in iron ore, and copper have come from falling Chinese demand or falling expectations of Chinese demand. So, potential opportunity there, and it looks like it'll be coming.
Hang Seng Index, which is, according to Google, a market capitalization weighted stock market index in Hong Kong, makes sense, tracks the performance of the largest companies listed on the Hong Kong Stock Exchange, primary indicator of the overall Hong Kong market. What is it up or down over 1 year?
Up over under 10%.
It's up 25% in 1 year.
Oh, that's not bad.
5 years?
0.
Down 25%.
Oh, close enough.
It's quite an interesting, because when you think
currency is a big thing there, and then you've also had issues at the top end of that market. So JD.com, Alibaba, Tencent, all those biggest companies have struggled, and there's been a lot of change at the top end.
Yeah. Do you invest in China?
We do, but on an actively managed basis. So I think when you're investing in China more than anywhere, you want an on-the-ground exposure to the sectors and companies that are doing well, that are innovative. You don't just want the big names, as we saw what happened to Alibaba and the Ant Financial debacle and all those sort of issues that arose. You want really on the ground. So active management's key, and someone that's been experienced investing there for a long time.
Perpetual, another fund manager, which we're speaking about a few today.
So you wouldn't really want to be...
Said, likely have to pay the ATO between $493 million and $526 million, which is 4 times as much as they thought they would have to pay in August. What?
Yeah. Well, that's why you get advice, but it's a bit of a surprise. And now they're saying, and the rumor, or not the rumor, they're saying that it may put the deal to a close. I think they were trying to sell their trustee, their wealth, like their advice business, and not their platform. Was it the platform business? But this changes the game. So, like this is like a demerger in a separate entity, and they were probably hoping on some sort of waiver of the capital gains implications. But that's huge.
That's a massive
from 106
amount of money.
to 400. That's 4 times, nearly 5 times higher.
Their whole company's worth $2.2 billion, so it's a quarter of the company
in tax. It's like you're selling all of the assets. So, it's good that they got advice before they proceeded with it. I'm sure KKR would still pay the same price. Just shareholders get left with a lot less if it goes ahead in that structure. What usually happens is lawyers get involved and they find some other unique structure or opportunity to do it. But it's interesting that all the fund managers are in the news in 2024. We know the strength of passive and the different trends that are pushing that, but active funds management as a business has been incredibly difficult.
Yeah. GQG is probably the outlier.
Even that has more recently had its issues with a couple of its major shareholdings and strategy, even though performance has been exceptional.
$7 billion business.
Yeah.
Okay. Let's not talk about GQG. It's a bit of it looks too good at the moment. Perpetual, I'll give you a double or nothing for your money. So you owe me 1 Magellan share, but I'm willing to run the gauntlet again.
Oh, okay.
Perpetual.
PPT.
Platinum.
PTN.
Or Magellan. 1 year view. So very short term.
What's the performance been year to date?
So year to date, Perpetual's down 23. So not a momentum trade whatsoever. Obviously, we know Platinum's a sack of potatoes.
I think I have to take Perpetual.
Really?
Yeah.
All right. So, that's okay.
I love a falling knife. So Platinum's just sitting there tempting me.
It's got a 15% yield according to the lords at Google Finance.
Okay. I'm taking Perpetual.
All right.
It's more than a fund manager. So,
okay. I'm going to zoom out. I'm going to give us, the 12th of December, 2025, this is on record. So you're saying, I'm going to put it in my calendar, Drew Owen bet.
Pete, who are you taking, Magellan again?
Yeah, I'll take Magellan. So we've got, Drew says Perpetual, if I'm not mistaken.
I did.
Drew says Perpetual. Owen says Magellan. Now, if I win, because you already owe me, you give me 5 Magellan shares.
Deal.
5 Magellan shares. And because Perpetual's worth a lot, I'll give you 2.
Okay. If it's worth.
Okay. So that's now officially
I've got a track record of seeing shares fall 60% after I buy them.
I could actually, by the end of 2030, I could be retired. This might be my financial independence retire early strategy.
Just take it off, Drew.
Just take whatever Drew's got. Okay, so just make sure I put that in the... Yep, got it. Okay, done. What else is making news? People are grossly underprepared for retirement.
Yeah, we had that. We had a new CEO at ANZ. So there's only one bank that hasn't changed the CEO at least lately. And interestingly, the new CEO of ANZ Bank was the head of wealth at HSBC.
HSBC, that's correct.
So an interesting pivot rather than global banking, going to like a wealth management business.
Yeah.
right at a time where legislation for financial advisors is likely to be loosened significantly, and armies of qualified financial advisors could be possibly spreading throughout the industry again. Is it a precursor?
Don't tell me that, Drew. Yeah, well, we've obviously, if there's one tailwind for the banks, it's that they might be able to go back into financial advice.
Yeah.
Which would be shocking for everyone. But the industry super funds have basically made it possible that that's going to happen.
And it's I mean, the challenge we have as advisors sometimes is the ability to scope and scale advice to something very narrow. Sometimes people only want a small part of our advice, but the best interest duty and a few of the other compliance areas we need to be wary of require us to give consideration to every part of your situation and the impact that every recommendation will make, which is why statements of advice increase in cost, because they take significantly more time than focusing on a single issue. And a part of that is the risk of getting that wrong and the implication that has for other parts of your situation that naturally opens up risk to people providing the advice. So I think qualified advice in a way will be a positive, particularly to get small parts of advice out to a larger group of people, but it has to be piecemeal. And it has to be regulated a lot better than it was when I was in the industry in the early 2000s.
Yeah. So basically what you're saying is they're looking at introducing rules that would allow you to just get that once-off thing like, hey, I need advice on my super or just for my insurance or just how do I turn my Australian super strategy into retirement mode kind of thing. But obviously there's a huge need. Oh, I didn't tell you. Passed the ASIC advisor exam.
Credit to you.
Thank you, sir. They said slam dunk.
Slam dunk. Right.
That's what ASIC said.
They don't give you a score, do they?
They said,
you just have to get 60% or more.
They said, bruh, slam dunk. They just had a picture of
It's actually rough. It's a very tough exam.
That was brutal.
Like it's got no relationship to anything you do in financial advice, if I'm honest.
I walked out. I think I told you this. I walked out and I was like, what the F did I
You should be tested on your ability to show empathy.
I was just like, this is really hard. Like, there was
what does paragraph 7 of Corporations Act section 274?
But I walked out, I was like, that is nothing like I prepared for. That was really, really, really hard.
Yeah.
And, I've done some exams in my time and that was really hard. Yeah, I'm very happy and congratulations to everyone that passed. Commiserations to those that will have to resit it. But yeah, made no difference to what I do, just in case anyone's wondering. But
well done.
Thanks. Yeah, good times. Didn't do.
We're looking for new advisors, associate advisors. Looking for a reach out.
Yeah. Hey, actually, that's a good reminder. If anyone wants to become a financial advisor, there's actually a question on this. I don't know if it's
might be in a couple of episodes.
Yeah, it might be scheduled for the future, but there is a question about moving into the industry. A lot of the financial planning groups are hiring right now for the new financial year, a new calendar year. So if you're interested, reach out. Just reach out. Just let us know anywhere you like. Oh, hey, I'm looking at transitioning careers and stuff. It'll be great. So there is a question sent through from Chuck Norris, which we'll get through in just a moment. But just quickly on this, we don't know your needs, goals, or objectives. That's what they want me to say from that exam.
You want to say a lot more than that.
There's a few more things. That means any of the information that you're about to hear is strictly general in nature and does not take into account your needs, situation, or financial goals. That's why it's best to speak to a licensed and trusted financial planner. The way you find the licensed financial planner is you go to the moneysmart.gov.au website and you can look up the Financial Advisors Register. Also, you can get matched to financial planning, like say Drew here, by going into your podcast player or YouTube in the description and clicking the link that says financial planning, and we can match you with one. Okay, so it wasn't Chuck Norris, I can confirm that.
Chuck D.
It was Chuck D.
Is that a reference to Run DMC?
I feel like it could be.
Yeah.
I feel like it could be. It says, in 2024, the average male life expectancy in developed countries...
He really didn't like that one, did he? Just trying to stay in touch with the zeitgeist.
Zeitgeist. We need to dial this zeitgeist into funds management by the sounds of it. In 2024, the average male life expectancy in developed countries is 76 to 81. Men who reach retirement age of 65 are expected to live another 18 to 20 years. So, should the investment focus continue to favor high risk profile investments like equities or shares rather than lower risk options like bonds or cash? Question mark.
I mean, is this just like a setup for
I think they knew you were going to be on the show.
Income plus growth
equals
total return?
Golden rule.
Is it equals golden rule? I mean, this is interesting because you look at life, and I'll be doing some work on this at the moment. You look at part of it. I read Die with Zero. I'm still reading Die with Zero. I think I've been saying that for 3 months now.
It's a running
stuck in a section there. But one of the biggest things they say is go do a life expectancy calculator. And then I also spoke to Beck Wilson on the retirement podcast.
Yes, you did.
And she's like, I think she's got one on her website, but there's some very good ones. So go do a life expectancy calculator and understand what retirement is going to look like for most people. And then I also trawl through YouTube comments and a lot of them are quite negative about people, retirement's only 5 or 10 years. But I looked for myself, it was like there's a 50% chance I'm going to live over more than 90 or 95. 50% chance I'll live longer than 90. But it says the life expectancy is 76 to 81, which would say I only live 15 years after retirement. But if you think if you're going to retire at 60 or 65 and you're going to live to 50% chance you live to 95, so that means there's a 50% chance you'll live longer than that. Yes, 100%.
Yeah.
You have to think about retirement in a completely different way. And then you have to think about the fact that something like 60% of returns over your entire life come from when you're in retirement and you're not putting money into your investments anymore. Now, I think there is a case that would say you could just go long 100% equities, possibly even geared equities. But the thing is, for most people and for a lot of people, the volatility that comes with a very growth-oriented approach isn't going to result in the most optimal outcomes. And for another group of people, they can get the outcome that they want. They can get the income that they need and essentially everything they need without taking that amount of risk. So it's balancing what you need versus what your time frame should be and what you're comfortable with.
Yep. A lot of people, when they flick on the switch to retirement, though, at 65, they're still more heavily in growth investments.
Naturally, yeah.
Yeah. We had a representative, Richard Dynam from Fidelity. He was on the show last year, and he said that he was an actuary by training, and he said, to be honest, the math suggests that anyone even in retirement should be 100%, like at the beginning of retirement.
The maths could show that, yeah.
Yeah, 100% growth, but the reality is a lot of people don't think like that.
You're prone to mistakes as well. Yeah. Like if you're 100% growth and then you experience a GFC, like my parents, probably the perfect example. They retired in 2007, invested and experienced a GFC within 2 years. That could have basically, at the bottom, there were times when they wanted to sell everything and would have completely changed the outcome of their retirement. So it's the emotional and behavioral side of investment is why diversification, income and growth and, things like bonds that are less volatile come into it just to help guide you through those challenging emotional parts of investing in retirement, investing in volatile assets.
Yeah, cool. I would second that, Drew. I would say that it is a bit of horses for courses, or it depends if you take that phrase. I would just say don't assume that when you go to retire that you should be conservative. That's the old literature. And it comes back to that point about changing the financial advice laws in Australia. One of the things that the super funds are really frustrated about is they're saying we can't even tell someone to not be, if they're 20 years old, to not be in defensive investments. Like we want to be able to say the most common sense thing in the world, but we can't tell anyone that. But then the lawyers and the government saying, no, you can say that. And they're saying, no, we can't because the laws that we've interpreted say we can't. And they're saying, no, you can. And so that's why the laws need to change, because you need to have, say, for example, someone that can't afford to see a financial advisor that's got $150,000 in their super fund at 65 or something. They think to themselves, well, what can I do? I don't really understand finance and I don't really want to spend $4,000 or $5,000 to get financial advice.
Yeah.
What do I do? So hopefully they'll be able to call their super fund. The super fund will be like, yeah, Sally, just stay in growth for a few more years and here's how you flick it over to pension mode. Hopefully that's the common sense that we get to.
I think it is a reason why financial advisors are able to talk more freely on things like this.
Yeah.
because we're taking our own risk as business owners, as licensing our own businesses. But once you get within that broader framework, the interpretations get more and more detailed.
Yeah, absolutely. Phil Thompson, financial advisor from Sky Wealth, just replied to me on LinkedIn, and he's looking for two people to join their team right now. And I said it sounds like a RIS strategy that he's pursuing, and he said he's just going to ask his 13-year-old what that means. But seriously, there are a lot of people that there are a lot of good firms like Waddle Partners here that want talented people in financial advice or people thinking about becoming, qualified advisors to reach out. So please reach out. I know we've had a few already. It depends, or it depends. Says, with regard to your 7 reasons property beats shares, that was an episode we did recently.
Yeah, what were they?
Hold on a sec. You could add another reason. With property, I can truly be an ethical investor by choosing to rent to those less fortunate and be a great supportive landlord. That's not something you hear every day.
No, it isn't.
Not many people like being a landlord, if I'm being honest. And it's true, you probably could. You can, in a way, try to be more ethical in your shares as well. It's just not, it's a bit of marketing. There's a bit of smoke and mirrors around that. But some of the reasons that property beats shares, Drew, were things like the kind of unique characteristics of properties. If I have BHP shares, you have BHP shares, it's no different. Yeah. But your house is different to mine, even if it's in a similar suburb.
Someone might like it more.
Yeah, you can use it for gearing strategies. Like you can redraw. You can, it's typically, there's no price that you can look up every day. So the reason we did that episode with Mark was that we did another episode, which was 10 reasons why shares and ETFs beat property. And then everyone on YouTube was just hating on us. So we're like, all right, now we'll do the other property.
You can't read those YouTube comments, trust me.
But no, that's great. So it's all fun.
Press is good press, that's what they say.
All comment is good comment.
I am always, and this is not to say anything about the person and renting to those less fortunate. I think it's always, if these are investment assets, and you're looking at buying an asset, it's always about, in my view, you can think about tax, you can think about ethical implications. You always want to consider on its investment merits at the beginning as well.
Yeah, because you could take that money and do something else with it.
Exactly. If you're supported and you're fine, then yes, 100%.
Yeah, but you could,
that's just
let's say if this was
boring.
I don't know, a $700,000 property.
Greedy.
You could take the $750,000, park it in VHY or some dividend thing that's reasonable, take the money and donate it to a charity or something.
Exactly. Is that more impactful?
Yeah, I think about that too. And we've had Professor Peter Singer on the show in the past, who's the founder of Life You Can Save, original animal rights activist, etc. Yeah. And he always talks about, he is a big proponent of effective altruism. And he started the service, The Life You Can Save, and it's all about how can you give money to save a life the most efficient way?
Yeah.
Because that would make sense. And if you think about your giving, I think that is where it comes down to. Like, there are things that I do, I won't say, but there are things that I do that I think have the biggest impact I can possibly do. They're not rent a property to someone, but for pound, what I can do with my money. So I think I take your point, pick an investment, but sometimes you just also got to do what makes you feel good. Condescend writes in and says, the Australian dollar just keeps going down lately. It must turn around sometime soon, ? If it does, what kind of stocks will benefit? Would a rising AUD be good or bad for gold stocks? Do you want to hear my going down joke? I was a bit intimidated by that comment when I read on. What do you call a snobbish criminal going down the stairs? And they say, here's the punchline, a condescending.
I give it a 2. But this is an incredible question because we've had this, like the question of the Australian, and a great dad, borderline dad joke. I reckon mine are better.
Yeah.
I just found a really funny one before. It was actually an inappropriate one that I read when you were reading the ethical investor question, which wasn't great timing, but I'll bring that out later. This is super interesting because the the Aussie dollar was starting to push higher because interest rates had been held, and one of the biggest influences on the movements in the Australian dollar are where interest rates are, because if you get higher interest rates here, more people want to invest money in Australia. But it's reversed almost immediately once Trump came into power and started talking about tariffs and boosting the US economy again, so sending the economy back into growth or protecting it somewhat. And a pretty swift turn too.
Yeah.
I mean, we talk about mean reversion, and we talk about, you know, the Aussie dollar and when to hedge when it's within 2 to 3 standard deviations from the mean. But it doesn't mean it can't stay outside that for an extended period of time. And I think we're still sitting just within one of those bands from memory. I'm sure you bring up your MACDs or your
technical analysis.
But I think the big thing here is don't be. I'm always wary of taking a short-term decision on where the currency is going to go. There's naturally going to be winners of an improving or an increasing US dollar. Gold stocks are complicated because the nature of being a listed company is that your management and your lenders always want you to hedge the price of a lot of the commodity you're getting. But if it's an Australian domiciled, Australian producing gold stock, generally a higher US dollar is bad for the Australian dollar gold price. You want a lower Australian dollar because gold is traded in US dollars. And more broadly, it's which sectors are going to benefit most from a strengthening US dollar.
Yeah. That's a good point you make about the hedging.
Yeah.
Every month, Pete Wargent writes his macro update for our investors and on the Rask Core membership. And he said this. He said, obviously, the Trump election is really important for people. There's been talk in November of tariffs that may be applied, and it looks like it's going to hit China, Canada, and Mexico on all exports to the US until migration and drug flows into the country are decreased, says Pete, and more broadly appear to increase the risks of a trade war. Remember the trade war from a few years ago, folks? Anyway, he goes on to say, a Freedom of Information request issued to the Reserve Bank of Australia revealed that the RBA had considered the potential impact of tariffs, concluding that the result could be downward pressure on the Australian dollar, bond yields, and interest rates. Australia ships a large share of its commodity exports to China, in particular iron ore, coal, and natural gas. And a potential slowdown in the Chinese economy is in turn expected to have some repercussions for growth in Australia. Australia's dollar declined from a high of 66.8 US cents in early November to 65.1 cents by the end of the month. The main reason for the decline was the aforementioned announcement of additional tariffs by President-elect Trump. So that's the big unknown. And we just aired an episode with Billy Long from Global X about this. I think there's a real interesting question here about what, like obviously any president coming into the US, but in the middle of tensions in the Middle East, like we just had the Assad toppled in Syria, which is, I'm no, political scientist, so don't take your tips from me, but I would say that has significant implications for the next 10 years in the region. Sure. And also with the talk about, is the US dollar the global standard? And
I mean, that comes up every year.
Yeah, it does.
Yeah. It's not going to change.
Coming.
It's the yuan, we're not, it's not.
But that, like, I'm not necessarily worried about that, but just what that means for when a new president comes in with Israel, Gaza, Ukraine, Russia. There's a lot going on in the world, and the investment world will look to Donald Trump's policies to determine their stance on pretty big things. And that could be significant over the next 6 months. And for Australia in particular, what does that mean? I'm not sure. But what I think about is that if the Australian dollar falls, you probably want US assets.
You want US domiciled assets.
Software companies, ETFs,
defensive
funds,
sectors.
Yeah, infrastructure, whatever.
And businesses like CSL that have big overseas, like 98% of their income comes from US dollars. Brambles pops up. James Hardie always pops up. Anyone with big US operations.
Macquarie.
Also in that, because you're talking about volatility and challenging economic environment, then you very much want consistent earnings because they'll be worth more and more.
Yeah. And then if it goes the other way, what companies benefit from a rising Australian dollar. Well, companies that import a lot would benefit. So just general companies that import products or like
commodities
retail,
tend to do well.
That sort of stuff. We're very fortunate in Australia that when we get volatilities, the Australian dollar tends to fall
very quickly.
And so what that does is it creates an insulating effect on Australia because we sell commodities, which is very unique in the world. So we're very lucky in that regard. All in all, though, I probably sound a bit doomsayer-ish. Whoops, because I just need the table. I wouldn't worry about it too much.
No, we're making. I don't think they'd be making too large a short-term decision based on the dollar.
Yeah.
Incrementally, you might be changing slight hedging positions if the Aussie dollar continues to fall. But I think in most cases, people are very invested in quality anyway.
Yeah.
And what you want in volatility and periods of uncertainty is quality.
Yeah. And you get that from a lot of the mega cap stocks anyway, like particularly in the US. So, definitely get that. There was one more question here, Drew, which I wanted to tempt you with before we say good afternoon. Just quickly, you bought your Tesla yet?
No, not quite. I've been into some very serious discussions about that, though.
Very serious. Sounds very serious. We'll keep that up. We'll keep you up to date. Don't worry, guys. And also, before we continue on, next Thursday at midday on the Rask YouTube channel, Drew and I are going live for the Christmas special of 2 cents.
I haven't done live for a while. Sometimes I sing for Christmas, so please don't.
But seriously, next Thursday, YouTube channel. We know it's a busy time of year. Bring your lunch, bring your pasta, throw your digital tomatoes. I don't know. Okay, this questioner's name is, where's the cashews?
Use.
Cashews?
Use.
Use, spelled Y-O-U''S. Where's the cashews? Makes sense. Want to say thanks for the podcasting year. I listen every week, and it is always informative and entertaining. I think more entertaining, but maybe. And special thanks to the Meredith family for their goat's cheese and everything eggs.
I can't claim the everything eggs part, but
definitely the goat's cheese.
Yeah.
Interestingly, I did have goat's cheese over the weekend, and the official, you know why I got it? I'm a bit of a tight ass at the checkout. Coles replaced my other cheese with the goat's cheese because they didn't have one. They didn't have one. Right. So I was like,
because of the strikes at Coles and Woolies. Oh, Woolies, not Coles.
And I was like,
we do have a live tasting. That's what we're going to do on the Christmas special next week. Yeah,
goat's cheese. Here we come.
No, not saying what it is. Could be anything.
So you have to watch on YouTube. I don't know what it is, but I got to say, $20 for that goat's cheese. It didn't last long because it was so
worth
good.
every dollar.
But it is so good. Every dollar. It is so good,
and I think it's healthy for you too. Who knows?
Yeah. Anyway,
if you say it,
if you say it, then it is.
It's healthy.
My question is: do you turn off financial news and leave your brokerage account alone over the Christmas break? Or do you spend a small amount of time just making sure things are ticking over? Well, Drew, you're a financial advisor. You kind of have to check. I kind of have to check the portfolios. But other than that, like personally, what do you do?
Generally, one of the benefits of this period is that pretty much all of the world, at least for that week between Christmas and New Year, kind of disappears. Volumes on the market go incredibly low. Companies don't really announce anything. If they do, there's something. Usually it's bad. You don't get good announcements during that period. So I keep a little... And you can tell by the fact that the Financial Review only does one issue in that entire period.
True.
So I kind of have some alerts that are like, if there's a material event on any of the companies or funds that are in our models or in our preferred portfolios, then I'll be alerted to it. And then I'll have a look at the FIN and ComSec once a day, essentially on my phone, to make sure I'm up to date.
Okay.
But we've also done investment committees already before we get to Christmas and are prepared to roll out recommendations early next year.
Yeah.
But I think, I'd be getting rid of the daily, the ticker, all those things, because it's barely going to move. I think usually the market actually goes up during this period.
What a prediction.
I'm just saying, anecdotally.
Take that to the
It feels like, no one's selling, so everyone's buying. But then always be wary if something significant does happen. And as you'd expect, I'd be back in the office, you'd be back in the office if we had a GFC or a pandemic or something hitting. But turn up as much as you can. Use the time to spend with family. Be present rather than worrying about what FANG's doing during that week.
It is doing a lot, we've heard. So for me, I don't log into my brokerage account
ever
that much at all.
Yeah.
Anyway, I use marketindex.com.au fantastic resource for like ASX announcements and news. I use the Stocklight app. You can create a watch list. It's just an app you can create a watch list, and if there's a material piece of news or an announcement, you can check it. You also get a weekly update from Navexa, which does tax reporting and stuff for our members. You get a weekly email that summarizes like your winners and losers. And then obviously I'm just checking our ETF portfolios every day and just keeping an eye out for things. But to be honest, I don't actually log into my brokerage account. And I think that's the key thing is you don't have to these days as much. Just log in when you have a purpose, because if you're just mucking around in your Southwealth or your CommSec or your Perla or whatever,
you're more likely to trade.
Yeah.
More incentivized to trade.
Yeah, you don't need to do that. Just use the other resources. I actually like Christmas because I don't do New Year's resolutions, Drew. But one of the things, as you, I'm sure the same, as a business owner, you don't get a lot of downtime. Christmas is a good time to spend with family and friends, but it's also a good time to kind of just check in with your admin, make sure the year ahead's going to be okay. Maybe do a little bit of a review if you're in a couple or relationship. Maybe go to breakfast one day and the sole purpose is, how did we go this year? What can we improve in the next year? Like really simple stuff that's really good to do this time of year. So yeah, we'll have maybe more tips next week as part of the Christmas special. So jump onto YouTube and you will find it there. We've also got a summer series coming up. We've got episodes with Marie Vakakis, Grant Hackett, Chow Ma, Ren from Equity Mates. We've got a bunch, Joe Aston, really heavy hitters.
Yeah.
So
it's going to be good.
It's going to be good.
It's stepping into lifestyle.
With who?
Lifestyle podcast.
Oh, yeah. Grant Hackett.
Yeah, exactly.
I'll let him know. No, he's an investor, Drew.
He is.
Been trading stocks since 13. We got a dad joke?
I do have a dad joke, and I think I'm going to like this one.
Go for it.
I'm going to like this one. I think you're going to like this one.
We hope so.
I have to keep the Christmas theme going.
Okay.
So, why do reindeer like Beyonce so much?
Something to do with red nose.
She slays.
I don't understand the full context of it.
Slay?
Yeah.
Yeah. That's all you need.
I mean, Beyonce's been in the news a bit recently. Anyway. What's that thing they say online? Nice try, Diddy.
Nice try. I think if anyone's listened to the end of this, well, good luck.
Anyway, I like the question and name, condescend, because you made it a joke and you gave us, in Drew's words, 2 out of 10 while you were passing through. So condescend, if you did write in, you get a free copy of Drew's book, I should say, The Golden Years, Making Billions, and then maybe even his next book, he'll get some tips from you as well. And the Value Investor Program that's available on Rask Education, the Rask website, which has all the courses. It's normally $499. For you, it is free. So write into us, condescend, and we'll hook you up with that. Drew, this has been heaps of fun. We're going to be back next week live. We're going to do a live tasting. The true Meredith family goat cheese will be in attendance. I don't know actually if they will, but maybe. Drew, absolute pleasure. Thanks for joining me.
It's good to see you.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.